Well, so the Fed won't cut interest rates. And I believe if inflation flares up, that's down to 3.1%, although the core rate, which is holding food and energy prices constant, what's happening to everything else, the core rate has been at 4% or more for the last 2 years. That's not going down. So with the core rate where it is and with energy prices probably starting to head up, I think we could be seeing a 4 to 5% inflation rate by the middle of the year.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we're in the midst of an inflationary cycle, whether the administration wants to admit it or not. It reminds me back in the 70s, there was a McDonald's commercial, and the little kid says, "Daddy, what's inflation?" And he says, "Son, that's when the price of everything goes up and your father's salary stays the same." I mean, that is the very definition of inflation, the silent tax. And there's no end in sight. Professor Michael Busler is with us, economic expert, and teaches the subject in Stockton College in New Jersey. Haven't seen you in a while, Professor Busler. It's great to have you back. So, hey, GDP went up 400 plus trillion last quarter, but debt went up GDP went up 400 plus billion. GDP went up 400 plus billion, but debt went up 800 plus billion. So are we just treading water here? Is there really any economic growth at all? Are we really in a recession?
Well, technically, the economy is growing. And President Biden says, look, I don't understand why people don't approve of my handling of the economy. Look, since I've been in office, the economy has grown steadily. We had a little decline in beginning of 2022, but pretty much growth has been steady. Unemployment is under 4%. I saved us from the lockdown, from the pandemic. Wages are now starting to go up a little faster than prices, at least the last quarter of last year. He says, so everybody should approve of my handling and not disapprove. So the question is, why do they disapprove? And they disapprove because they feel badly about the economy. Why is that? Since Biden came into office, on average, prices have gone up nearly 20%, yet people's income haven't gone up nearly that much. So what it means is the things you bought in January of 2021, you can't afford to buy today. So you're either buying less things, buying lower quality things, trying to find some substitutes for what you're used to buying. All of that means there's a decline in the standard of living. And all of the data you put forth and tell them how good the growth is and how unemployment is low and all this good information may influence their thinking, but you can't influence the way people feel. And they just feel terribly about this economy because they can't afford to buy the things that they bought in the past. Let me add one other point if I can, Kerry.
Sure.
The Biden administration says, look, inflation was way out of hand in 2022. It got up to 9%, over 9% in June of 2022. I brought it down to 3.1%. That's a real good thing. And of course, that is somewhat a good thing. But two things. One, I don't believe the consensus view that says inflation will continue to fall and the Federal Reserve will cut interest rates a number of times this year. I think inflation is going to start to head back up again. And I don't think the Federal Reserve will cut interest rates at all this year. And in fact, I wouldn't be surprised if they raised rates one or two times before the end of the year. So there's a couple reasons for that. One, large wage increases that people got at the end of 2023, say that's good that people are getting higher wages, but it's bad in that all of those higher wages will lead to much higher labor costs for business. For instance, the United Auto Workers signed a 4-year contract that essentially gives them close to a 7% annual raise. That big health organization in California, Kaiser Permanente, they settled for wage increases also in the 6 to 7% range for the next 4 years. Once the average worker saw that, they said, well, we're entitled to more wage increases too. So wage increases are going up. There's no increase in productivity, or it's much smaller increase in productivity, which means labor costs are going up. And if business is going to maintain profitability, they're going to have to raise their prices. So I think wage inflation is going to lead to more price inflation. Secondly, most of the decline in the inflation rate was due to falling energy prices. Energy prices stopped falling. In the last couple of weeks, they started to go up. I don't know what's going to happen in the Middle East, who's fighting who and what's going to happen. But it could lead to a disruption in the supply of oil. If that happens, oil and energy prices will go up even more, and that will lead to even higher inflation.
Oh, man. So you think we could get higher inflation than we have now, huh? And where does that leave the Fed?
Well, so the Fed won't cut interest rates. And I believe if inflation flares up, that's down to 3.1%, although the core rate, which is holding food and energy prices constant, what's happening to everything else, the core rate has been at 4% or more for the last 2 years. That's not going down. So with the core rate where it is, and with energy prices probably starting to head up, I think we could be seeing a 4 to 5% inflation rate by the middle of the year.
That much, huh? Wow.
Yeah.
Who would think? So 4 or 5%, that leaves the Fed no wiggle room, does it?
They can't raise it. They can't reduce interest rates. And in fact, they may have to inch interest rates up a quarter of a point once or twice by the end of the year. Let me just say that's not the consensus view. You talk to most economists, they believe that inflation will continue to go down, and they believe the Federal Reserve will cut interest rates. Now, back in November, they said we could see 6 rate cuts in 2024. Now they're saying, well, we're going to see 3 rate cuts in 2024. Originally, they said you'll see the first rate cut in March. They said, well, that's not going to happen. So we'll see the first rate cut in May. Maybe that's not going to happen either. The earliest we could see one is June. And I believe when the data comes out, that's not going to happen either. So the Fed, you're right, is in a tough spot. They can't cut interest rates with that inflation going up. And indeed, they may have to raise them, which will tend to slow down economic activity.
Ugh. So the Fed is really stuck, aren't they, Michael?
Yeah. Last week in my Newsmax column, it was entitled Stagflation Could Be Here by the End of the Summer. So stagflation means we have higher inflation and the economy is not growing, stagnating, hence the term stagflation. If what I'm forecasting turns out to be, and inflation does go up and energy prices go up, and the Fed has to react to that by raising interest rates, the economy is already slowing down. You read about large layoffs, particularly in the tech sector, but large layoffs by a number of companies, and that's indicative, I think, of the economy beginning to slow down. So if the Fed has to react to inflation by raising interest rates, that will cause the economy to slow down further. And it could be that we have higher inflation and a no-growth economy by the end of the summer, and that's what we call stagflation.
Well, one semi-encouraging note is China is imploding. So a lot of the capital there is flowing out at a rapid pace, finding its way in the U.S., especially with higher rates. You think that trend's going to continue?
Yes. China, when they did that lockdown completely, I guess at the end of 2022, their economy never recovered. So all of 2023, they had extremely slow growth. It's hard to tell from China because you're not completely sure that the information you're getting is reliable. But nonetheless, most of the indications are that the economy in China is doing very poorly. that's reducing the demand for energy, and that's one of the reasons why energy hasn't gone up in price. But their economy is not doing well. The real estate sector, which was built on debt, is not doing well at all. Evergrande, which is the largest real estate developer in China, has filed bankruptcy, and a couple of other large ones are perhaps on the verge of defaulting. So the Chinese economy has some problems, and you're right. Any investors there looking for a safe haven may move some of their money to the U.S.
Yeah. Country Garden, I think, was the other one. And, they got nothing but problems going on there. So what's your take? What do you think is going to happen with China? Do they go much lower, or what happens?
So remember, China is not a market economy. It's a planned economy that's run by the government. They tried to put some market forces into their economy, and it's had some mixed results. But because it's a planned economy, their government will not allow them to slip further. So they'll start pumping a lot of money into the economy to try to revive it and start to add growth. I'm not sure how effective that's going to be, and even if it is effective, it's going to take some time. That means China has less money to spend on some of the more nefarious things they do around the world, and that's a good thing for us.
Yeah, a lot of nefarious stuff going on, that's for sure. Hey, so when we have this conversation in a year here, Professor Busler, where are things going to be?
So I think if we're having the conversation a year from now, I believe that the American voters will change the administration and probably change the Senate. So if we get a Republican administration in there, the first thing they'll do, they'll want to tackle inflation as quickly as possible. There's two things you can do to bring inflation down. Number one is energy prices are about 30% of the consumer price index. So literally from day one, the Republican president will say, look, we're going to start to rescind all of the things that Biden did. Remember, Biden canceled the Keystone Pipeline. If that was going today, that would be nearly 1 million barrels a day more we'd be able to pump. He withdrew leases to drill on federal lands, and that took a big chunk of valuable real estate where a lot of oil can be found. He made the permitting process extremely difficult, so it took these oil companies years to go through the permitting process and come up with a permit to be able to drill it all. And fourthly, he told the banks, be careful lending money to the petroleum industry because there's no future. So the Republican president, probably Trump, will end up reversing all of this. That will increase oil production. That will bring oil prices down. That'll bring gasoline prices down back from, I think the average today is about $3.30 a gallon, could go down to the $2.50 a gallon range. That'll put downward pressure on all prices, help bring inflation under control. The second thing is that the federal government has run up huge deficits. In the last 5 fiscal years, 2021, 22, 23, and 24, the federal government has run deficit spending of over $11 trillion. That's $11 trillion spent more than they brought in tax revenue. It's trillion. So, of course, that's why the public debt is now up to $34 trillion. So I believe the Republican administration will be more fiscally responsible and will work to, if you can't balance the budget, at least bring the size of the deficit down. So that's the second thing they can do.
Okay. But Professor, what about President Milei in Argentina? You know, Argentina ran deficits for 11 or 12 years in a row. In 90 days, he has them running a surplus. Now, I don't know if they're going to be marching on the presidential palace with pitchforks, but you know, and he's done a lot of stuff for a very short period of time, which brings us back to Milton Friedman's 100 days. You got 100 days to set your administration. If you fail, you're not going to get anything done. You think that still applies?
Yeah, Mealy did it very well in Argentina. He's one of my heroes. He came in there and did exactly what a conservative economist would do. Now, they're very unpopular because what you have to do to balance the budget is you don't want to raise taxes too much, if at all, because that tends to slow economic activity. So you have to cut spending, which means there's a lot of spending. People were used to getting free handouts from the government, and they're not getting them anymore. So you referenced the fact that they could be protesting on the steps of his office, and that could happen. It tends to be unpopular in the short run, especially from people who have been given handouts for all these years, and the handouts are now being stopped. As time goes on, though, that'll turn out to bring on more prosperity to Argentina, and people will tend to think that's a good thing. Now, your other comment about 100 days, it's true. You really have to set what your agenda is, only to get everything passed, but you have to set what the agenda is. Here's what I'm going to do. On day one, the president can reverse all the executive orders and let the oil industry start producing again. We have a terrible problem with, I don't know how many million people have gotten into the country illegally. It's now spread to almost every city across the country. And regardless of what all the rhetoric says, it leads to very negative outcomes. Here, these people are coming in with no means of support. Now, some cities like New York, Mayor Adams says, we'll just give you free money and free credit cards. Well, that's not it may make sense in the short run. In the long run, it makes it worse. Because now people come into the country and they say, hey, if we don't have any money, we'll just go to New York City and they give you all this free stuff, or go to California where they give you all this free stuff. So they've got to find a better way to handle this. The best way is to secure the border. Just secure it. Yeah. Don't tell us about all the presidents that have had problems. President Trump had the border secure. Biden undid it through executive orders. He can fix it through executive orders.
So interestingly enough, this reminds me of that back in the day when someone would apply for welfare in like Houston or Dallas, instead of paying them money, they would give them a bus ticket to New York City. And that's effectively what the world is doing, just sending their people. But, this is all Trump's fault, because for a real simple reason, if he'd finished building the wall, it wouldn't be an issue now. But so it's all Trump's fault. No matter what, everything is Trump's fault. And you always have to remember that. But this is a family show. We don't talk politics. We talk economics, which is why you're on the show. Appreciate you coming on. Been a while. We always look forward to your view on things. And you can find Professor Busler's work on newsmax.com, as well as just do a search. We'll put his LinkedIn profile link on the show notes for this interview on financialsurvivalnetwork.com. If you have a question for myself or the good professor, shoot me an email, kl@kerrylutz.com. Don't forget to sign up for your free newsletter. Professor Busler, always a pleasure. Thanks for stopping by.
Thanks for having me, Kerry. Look forward to doing it again.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.